Okay everyone, today is Wednesday, November 21st. This is going to be the last video until Monday the 26th, after Thanksgiving. I just want to comment a little bit on what's going on with the pound here. I'll go up to the 4-hour bar. You can see that there was quite a bit of volatility as the British pound was coming off of this high. It was a very fast move down. I want to show you the euro along the same time frame. That's the wrong currency pair. You can see that the euro also had a little downdraft here. The pound was significantly larger, indicating that the trouble that you're seeing right now with the pound has to do with the pound. With the euro moving up, quite obviously there's a bit of strength going on here. The euro is at an all-time high right now, but that isn't spreading to the other currency pairs. You can see here the New Zealand dollar is well off of its highs. In fact, the New Zealand dollar has not recovered like the British pound has, and the Australian dollar has not recovered. So there's quite a bit of selling going on in the New Zealand and Aussie dollar pairs. What you're seeing here is the unwinding of the carry trades. I haven't talked about this a lot, but it is very, very important for you to understand that the carry trades will absolutely impact trading. And all you have to do is Google carry trade. And you'll see some very interesting articles out there going on about the carry trade, how it works. There are a bunch of different theories out there, but in essence, all it is you're selling a low interest rate currency pair, like the Japanese yen, in order to buy a high interest rate currency pair, like the Australian dollar, or the New Zealand dollar, or the British pound, and also the euro. Because the Japanese yen was at, in essence, 0% for so long, with these currency pairs at 6, 7, 8% interest, there's quite a bit of money to be had. Well, now that the Japanese are talking about raising interest rates, risk is starting to go up across the world. You're seeing credit constricting. Usually people will borrow money to make this an even more complicated transaction. Quite often what you'll have people do is go out, borrow money in order to sell the Japanese yen to in turn buy the Australian dollar. So you might find somebody taking a loan in US dollars to buy yen to in turn sell the yen to finance the Australian dollar purchase to get the interest rate. So anyway, it can get very complicated. It's directly tied to money. Interest rates and credit. So with the subprime mess that's going on right now, you really have to understand that we are in a radically different market than just 6 or 7 months ago. I can't stress this enough. The one thing that you've got to realize is that the markets change, especially when big events like subprime hit the marketplace. So anyway, I just wanted to comment on that over the weekend, something for you to definitely consider as you're watching the markets. Nothing really setting up here, not surprising. Most U.S. traders went home early today. They're not going to be working tomorrow, and then most trading desks will have a skeleton crew for Friday, so everybody can enjoy a long weekend. So there's not going to be a lot of trading activity anyway. What you see on the chart here is a thin rectangle illustrating a support zone. This is something that I drew on a chart while I was in conversation with one of the crew members today as we were talking about how to monitor trades. I'm going to be producing some more videos about this concept rather, as well as some different trading checklists for you to use in your own trading to not only help you monitor, but to simplify things in a very real way to make it easier for you to trade. But as I said, nothing really setting up here. As I zoom out, you can see that the market held this area in here of resistance a little bit above what I was looking for, which is about, let me see, I'm actually forgetting, 618 was the level I was looking at. This was a couple of days ago after we got in on this breakout to the upside. So you can see the market is forming a resistance level here, really in no man's land. With the volatility as the market was falling, there are quite a few vacuum areas in here. A big vacuum area all the way down from about 211 to 205. All the way up here, you can see vacuum areas into this region, right about in here. So we've got to be on the lookout for a couple of things. The market looks like it's trying to form this trading lane here, which should provide some good counter trend trades. So let's talk about those, since that's really the only, I would say, legitimate setup that we have. Let me go ahead and put this on. You see, it is a very nice trading lane. What you've got to look for as the market trades down to the bottom end or the top end of the channel is for the market to start to slow down. Ideally, what you will have is the market making a big spike in volume as it gets close to this area down here. This is where you can then bring in your 15-minute bar and start looking for 3-bar reversals. It just so happened with this setup that the actual entry didn't come until the second bottom over here, which was several hours later. So the first bottom was formed about 6 or 7 in the morning, and then the second bottom was formed over here about 11 o'clock in the morning. So really you would have had to wait until that point to get a good 3-bar reversal. And if you look at the 15-minute chart, you'll see right about 11:30 there was a very nice 3-bar reversal. The market shot upwards, produced some really nice gains. But this trading lane, I think, is going to provide some excellent trading for probably the next week as the market is coming into the holiday season and possibly some reduced liquidity and reduced volume.